Alright, so once again, you can scan for potential rally on downtrend setups through the Thinkorswim Stock Hacker, the Finviz custom screener, as well as the TC2000 Easy Scan software. So let's run through them once again. So let's begin with Thinkorswim using the Stock Hacker to scan for rally on downtrend setups. So again, ensure that the S&P 500 is bearish to begin with. The S&P is below the 20 EMA, and ideally 20 EMA is below the 50 moving average. So with that, let's scan. Before that, we have to set up our scanner. So go to Scan, go to Stock Hacker, and remove what you have there initially. So we're going to begin to create a new scan for shorts. So we're going to begin by clicking on Add Study Filter. Click on Study and choose Custom Study. And delete that. Go to ThinkScript Editor. So there are 4 scans we are going to create. So all you got to do is to, So you have got the rally on downtrend 50. Rally on the downtrend 100, 150, and 200. So there are 4 scans to create, and just go to the website to download the scripts, which are here. So there you go, you've got these 4 scripts. So let's start with the first setup, which is the rally on the downtrend 50 moving average. So copy that and paste that over here. There we go. And click OK. So we have that custom screen. They'll look for stocks where the 20 EMA is below the 40, 50 below the 150, and the price recently touching the 50 moving average. Now for shorts, we have to put a filter to look for stocks above $10 to be safe. So add filter for stock, closing price, minimum $5. Sorry, $10. Okay. Next, add a study filter over here again. And this time we're gonna choose volume, average volume. So average volume, 150,000. There we go. So it's all set up. All you gotta do now is to go to this widget, click, save the scan. So we're going to save this as rally on downtrend 50. Okay, save. So I've already saved it, so I'm not going to save it again, but click save, and once it's saved, it's in there. So what's the next step? Once you've done 50, do 100, do 150, and do 200. So repeat the process. So for the second time, you don't have to change this or this because that remains the same. The only thing is to change the custom script. All right. So click on this pen to edit. Click on ThinkScript Editor and remove the 50 and paste the 100 now, which is this one. So copy this one, copy, and paste. All right, so this is bouncing off the 100. Click OK. Go to this widget over here. And save the scan. And rally on downtrend 100 MA. All right, save it. Okay, so once you have done it, it should be here. So go to that widget again, load scan, and there you go. So I've got all 4 over here. downtrend 50, 100, 150, and 200. So once it's there, you can again scan for the whole universe of stocks. So over here, you can click scan all stocks. Okay, and ready, let's go. Let's click scan. Well, first let me check what we are scanning for. All right, forgot. Yeah, so okay, we gotta load the scan first. So we're gonna load rally on downtrend 50. So that's the first one we're gonna scan. Ready? Let's go. Let's see if there's anything that pops up on the 20th of January. It's a Sunday, so I'm screening for when the market opens on the 22nd, because tomorrow's a holiday. All right, so the scan is done, and as you can see, we've got a whole list of potential trades that came out. So we're going to look at the charts. To do that, we're going to create a watch list to make it simpler. So let's go to this widget over here, click on that, and save as watch list. So what do we call this? We call this 20th of January, rally on downtrend 50 moving average, and save. So once we have saved it, we click on that to open the watch list. So on the watch list, let's look for that watch list. Gonna click on that, and where did we put it? There, 20th of January, rally on downtrend 50. There was a watch list we just created. Click on that, and again, remember to link it. So go to charts. This is red, so link it to red. So when it's linked, you click on the stock, the chart will appear. Ready, go. Boom. All right, so the first one is AAWW. Do we see a trade? Well, it's a nice downtrend sequence. It found there's a resistance at the 50, but it kind of has broken above the 50, right? So it doesn't look like a trade anymore. And again, everything is still bullish, so we had no bearish confirmation. So skip that. Next, ABBB. This stock has too many gaps, so I'm not interested in, gappy stocks. For this one, it's really choppy. There's no clear respect of moving averages. Well, it is respecting the 150. You can see, right? It's respecting the 150. It seems to be a strong resistance, but notice it's making higher lows, and I don't like that, right? On a downtrend, you want lower highs and lower lows, but it's making higher lows, which tells me it's kind of trending up now. It's no longer going down. And you can see that earnings will be announced soon, right? So never trade before earnings. So these are the things I look for when I look for a potential trade. I don't see a clear setup over here as well. Nope. 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 For this one, you can see it's rallying, finding resistance at the 50, but the 50 has not been tested to be a strong resistance before. So I'm not convinced this will be a strong resistance. It has to be tested before. No test. This was a test over here, but it kind of broke above the 50 and it never turned bullish. Sorry, never turned bearish. Okay. So this looks interesting, AGIO. And you can see it is rallying to the 50 moving average, finding resistance there. It has been tested before. So this is a very nice setup. Okay. So I expect it to go up, hits resistance, comes down, hits resistance, and it will likely come back down. So that's a nice short setup, but this is still bullish, it's still bullish, it's still bullish. So we have to wait for one of the indicators to turn bearish before putting the trade on. Relative strength is below the baseline and it's trending down, so it's also a perfect short setup because it shows a weak relative strength. But be careful of this symbol that tells you that earnings will be announced on the 14th of February. So right now is the 20th of January. We have some time we can take the trade, but we have to exit the trade before the earnings are announced. So I'm going to watch this really carefully. AGIO looks like a pretty decent setup, right? So let's imagine if it was bearish now. So if we had a bearish signal, where would we place our sell order? So we would place our sell order right below the low of this candle, correct? All right, somewhere there. The low is 54.84. We could place a stop loss, our entry sell stop limit at 54.79. Now I can't get the exact price here because it doesn't move in exact price, but yeah, somewhere, yeah, just somewhere there, right? So I'm going to sell here, and I'm going to put my stop loss 1 ATR above this moving average resistance. So I'm going to calculate the ATR, go on to this magic potion, just remove this to make it clearer. ATR, and look at the last 3 months for ATR. Go to 3 months and take the average ATR. So the top is $5, the bottom is 320. I would say the center is somewhere about there, about $4, right? So the average ATR is $4, which means I'll put my stop loss at the 50 moving average, 56.84 plus $4. So that's 60.84. Somewhere well, just somewhere there, right? There we go. And we go, right? So that would be my sell entry. This would be my stop loss, and that would be my 1 hour distance. So there's a lot of meat on the table. If it reaches the previous low, you could achieve at least 2 hours in profit. And again, if you don't want to put a fixed target price, you can leave the trade and let it, trend all the way down, and you could make a pretty good profit from there. And all the time, you can lower your stop loss to protect your profits and to protect your trade once it starts moving down. So this is really a nice setup, AGIO. This is the kind of setup I'm looking for. And again, I could go through hundreds of charts, and I'm only satisfied if I see a setup like this that's really clear. But again, S&P 500 should be bearish when I take this trade, and I have to wait for the indicators to turn bearish as well. So once you have scanned for the rally on the downtrend 50, you can move on to 100 and 150 if you want to. And the process is exactly the same. All right, so the second way to scan for potential rally on downtrends, again, is go to Finviz, go to the home screen or home page, and look for channel down custom screen over here. Oops, I don't think it went to the right place. Let me do that again. Channel down, that's right. All right, so right now, these are all the potential stocks on a downtrend. And again, I'm looking for one that is clearly trending down, finding resistance at a moving average. So I'm not interested in all these because there are a lot of gaps in the price, or it's really choppy. This has too many gaps. This one looked nice, but it broke out of the resistance level. This broke out as well. That's too low. That looks like it broke out as well. DSPG, let's take a look at this one. So once I identify a potential candidate, I'll put it on my charts, DSPG, and see if it's bouncing off any of the moving averages. So it's not, right? It's actually probably bouncing off a trend line, but I don't use trend lines for this strategy. I'm looking at specific bounces off the moving average. So I'm going to skip that. YTRA, let's look at this one. It looks like a pretty clear pattern. All right, so you can see it bounced off the 150, right? But the 150 was not recently tested. So I'm not convinced that this is a strong resistance, although it has come down a bit, because I'm strictly following the rules of the setup. We want to see a clear recent test of that same moving average. That's broken out. Too many gaps, too many gaps, too many gaps. All right, let's go to the next page. Too many gaps, broken out. How about this RS? This looks interesting. Looks like a clear downtrend. Is it bouncing off the moving average? Well, this was promising initially, right? So you can see it bounced off the 50, it tested, it went down, tested, it went down, and it came up and it broke above the 50, right? So it's really broken above. That doesn't seem like it's gonna come down anytime soon, and all this is bullish anyway. So, but it was a nice price action. If this had reversed with the indicators becoming bearish, that could have been a really nice short trade, because it was respecting the 50 until now. It has broken above the 50, so no more trade over there. That's broken out. What's that? How about NGS? Let's check that out. NGS. Okay. So it bounced off the 50, but the 50 was broken. It was not tested to be strong here. It seems the 100 is the stronger resistance. So there's no trade setup over here as well. SHOP looks like a a nice trend line, but I want it to coincide with a moving average. But I'm just going to check it out. Let's see. Yeah, it's not respecting the moving average. How about FENC? This looks possible. Now notice it's a pharmaceutical company which is below $10, which I find it too risky to trade. We don't trade, or rather we don't short stocks below $10. We don't short stocks in the biotech or pharmaceutical industry. And I'll explain more in the next few slides. So I'm going to skip that one. This looks like it is broken out, but let me just check it out anyway. FM. You can see it's, there's no clear support anywhere. So you can see on a typical day, you could go through many charts and not find a setup. So you got to be very patient as a trader. You're looking for, all the stars to be aligned to take the trade. So never force a trade. Never say, I have to take a trade. Let's take, the best of the worst. No. If there's no clear trade that's compelling, you do not trade. So that's part of the psychology of trading. You either buy, you sell, or you do nothing. And in trading, doing nothing is doing something. So looking at it, I don't see anything that's compelling to trade right now. There's no really compelling trades. Too many gaps. This looks interesting. EXP. Let's look at EXP. All right, now EXP looks like it bounced off the 50 over there, and well, you could argue that this was a test. It bounced off the 50. But you can see earnings are coming soon. This is the earnings icon, so we don't want to trade anytime before earnings. And currently it's already turned bullish, so I'm not too interested in this. Still scanning through to look for any setups. By the way, as I'm speaking to you, the S&P 500 is bullish. It's above the 20 EMA, so I will not take any short trades even if I find a good setup, because it's going against the overall market direction, which is going up. But I'm showing you how I'm scanning it just for your knowledge. Okay. EQM. Let's check this out. So in fact, right now the S&P is bullish. It's actually a better time to take long trades and not short trades. Okay, this looks interesting. We can see EQM. Again, it's bouncing off the 50. It was tested here, so it tested the 50, came down, tested the 50. So right now it's at the 50. It's looking like a bit of resistance. But what's that over there? You know, earnings is coming. Earnings are coming. So again, avoid trading just before earnings. And currently it's still bullish, it's still bullish, it's still bullish. So we don't have a confirmation it's coming down yet. So again, because of earnings, I'm going to skip this completely. But if there was no earnings, I would KIV this and watch it turning bearish. But again, the S&P is bullish, so again, I would skip it if the S&P continued to be bullish when that happened. So I don't find any trades yet. I'm still searching. And by the way, Finviz is a free screener. So if you don't want to pay for a screener, this is a good way to find stocks. Okay, AGO, how about this one? AGO. All right, this looks nice as well. Okay, so you can see it is at the 50. It has been tested to be a strong resistance. So it went boom, resistance, coming down, going up, finding resistance. So it could be a nice trade down. Again, it's bullish, bullish, bullish. So it's not bearish yet. So I have to KIV AGIO and see if it turns bearish for a potential trade. Now notice earnings is here. So if you take the trade, you have to exit before earnings are announced. Now, relative strength, again, notice it is below the baseline and it's trending downwards, so that's a good sign. When you're going short, you want relative strength to be weak, you want it to be trending down. So that passes as well. So that's how we screen for trades on Finviz, looking for these very clear downtrend setups. Finally, I'm going to show you how to screen for short setups with TC2000 Easy Scan. So we're going to set up the scan, click on Easy Scan, new condition, write new formula, and we're going to paste our script. So again, download this from our website, and the script's over here. It's basically, what's the typo? It's downtrend short, but the script is correct. That's right, downtrend short, all right? So for TC2000, you just have to create one scan because it scans all moving averages at one time. So copy the entire formula, including the bracket, really important, don't miss the bracket out. Copy that, paste it here, and call it rally on downtrend. And save it. Okay, done. So click on this, open new scan, select rally on downtrend, and you can scan for all US common stocks. All right. So notice again, you can scan for a particular watch list that you create, your own personal list, your favorites, but we're going to scan for all US stocks. And we've got a whole list over here, and let's check them out. Let's see if any of them look promising. Right, CORE. No, it's choppy. There's no clear trend. So again, you can see it's really choppy as well. Not all stocks are tradable. This looks like it's bouncing off the 150 over here, and it's been tested before, so we could KIV this, right? But again, MACD is bullish, Force Index is bullish, and relative strength is going up. You can see relative strength is rising, so I will not short this, right? So for shorting, recall I want relative strength to be trending down, but it's trending up. So this is a strong stock for now, and it's not weak enough to short, so I'm gonna skip that. This on a downtrend, you can see it's finding resistance at the 100. I wouldn't say this was a strong test. I like to see it bounce off, so no. I'll tell you when I find one I like. So none of them meet the criteria. No, I don't like that as well. This looks like it's on a downtrend, it's on a rally, it's bouncing off the 50 resistance. Would you consider this a strong test? You know, I don't know, right? It kind of like broke above it, came back down. I'm not that convinced about this pattern over here. Wait a minute. Okay, on second thoughts, this may not be bad, right? And the reason is this. Now, notice there is a resistance over here. Now, this was support, and you know, remember, support when broken becomes resistance. So this could be a potential support turn resistance. So we could look at this potentially. So we could KIV the stock. Again, it's bullish, and bullish. So one of them has to turn bearish, and we could potentially take a sell order to take the trade all the way down. And placing again our stop loss 1 ATR above the resistance moving average. So let me just KIV that SRC. You know, on second thoughts, this may not be that bad. But again, you know, look at the market. Market's bullish. Don't take a trade until the market turns bearish. Let's look at a few more. Don't like this one. Don't like this one. This is not. Well, the 50 has not been tested before. Yep, so I don't know. No. Let's look at this one. This may be a potential trade. You can see it rallied strongly, and it's finding resistance at the green line, the 150. It was tested before, so we could have a pattern of it, you know, coming down. So I could again watch this carefully. Now, what am I waiting for? I'm waiting for a bearish candle to appear. Again, we don't know it's the high until a bearish candle closes with a lower high. So we're waiting for a pivot point and a bearish candle to appear. So we have to wait for a bearish candle to appear, and we have to wait for one of the indicators to turn bearish before taking the trade down, before placing our sell order and our stop loss. How about the relative strength? Now, if you look at the relative strength, it looks like it's trending down, right? The relative strength is trending down, so that's fine. It looks like a really weak stock. So we could look for a short. Again, we'll have to watch it. Yeah. So that's what I do. So I screen for stocks with Thinkorswim, with TC2000, and if it looks like there could be a setup coming, I will KIV, keep in view, put it on my watch list, and I watch it closely for the setup to be validated, and I'll take the trade on that particular day. So this concludes scanning for stocks using Thinkorswim, Finviz, and TC2000.